were all moments where we questioned whether or not our business would be around, and they were all precursors to the greatest opportunities we had ever seen.
Sure.
This will be no exception.
Thanks for coming on.
Yeah, it's a pleasure.
I've been watching your LinkedIn. In fact, I was following your LinkedIn, and then our friend Chris Heisey was like, you guys should connect. You had a nice little interview last week. You had CEO of Rocket on there, right?
Yeah, Varun Krishna.
Tell me about that.
Just aired today.
What'd you learn?
I learned that he is, I think, the white horse that the industry's been looking for, the mortgage industry. We've been lacking a voice. We've been lacking collaboration. For the longest time, leaders in the mortgage industry have sort of kept everything very close to the vest.
Yeah.
You rarely ever see people step out and say, here's my playbook.
Yep.
Join me, do it yourself, whatever. And that's what he's doing right now. He's sort of choreographing what Rocket's doing, and obviously they just acquired Redfin and Mr. Cooper.
Yep.
And they don't have any plans to slow down. You know, what I learned that he came from Intuit, and, you know, in some other tech companies, he's been in the game for over 20 years. And at Intuit, they got to a 50% market share with their software TurboTax.
Yeah.
I think he thinks he can get there in mortgage, which is scary if you're in the mortgage business, which I am, because they're right now under 10%. So what would happen if Rocket grabbed another 40% market share? They'd put a lot of people out of business, or we'd all be forced to work for them, which maybe wouldn't be such a bad thing.
Now, there's some interesting things there. So I listened to half your podcast this morning. Before you
Only half?
Only half. Listen, I'm a busy guy. I'm in meetings all day. In fact, I just did it because you were driving.
If we were good friends,
late.
you would have listened to more, I think.
I'm going to listen to the whole thing. I only got through half, and then you arrived.
All right.
So, I mean, I do like the fact he talked about there was a multi-trillion-dollar market cap. I mean, the fact that you have $1 trillion in any industry, right, is just nuts, right? And that opens up opportunity.
Yeah, we'll do $2 trillion in 24 in mortgages, right?
Yeah.
Which obviously you're doing great title work, so you'll probably close half those
of
mortgages
course.
at least.
Easy.
I mean, you're everywhere.
So you got that, but also I heard him talking about AI and how, like, you know, it gets rid of all these menial tasks and opens up all this productivity for other loan officers. It makes a ton of sense. We're looking at it ourselves, trying to figure out when do we implement AI, but we didn't want to necessarily be the first person messing around, so we're testing some things. What are you doing for yourself in terms of AI currently, or what are your people doing at your company?
Yeah, it's funny you should ask. So the founder of our company, David Silverman, started a company called Inside.ai, INSYDE.ai. So a different play on Inside. And unlike the majority of the mortgage industry, which for every 10 mortgage companies, half of them are using AI, the other half aren't doing anything yet, which is astounding to me, right? That they're so far behind, you know, and this is something we should talk about, because Rocket has all the money, they have all the powder, they are lapping the field multiple times a day, in my opinion. Think about that for a minute. The 5 that are using it, of the 10, and I gave an example, they're just using it for menial document gathering. So my HR documents, guidelines, loan approval, loan scenario desk, whatever. So what we decided to do was, what can we do to move the needle for sales? So we're the first software that I'm aware of in the mortgage space, which we built this, which marries the LOS, which is what loan officers put the information in. It's the origination system, with the CRM. Which is obviously, everyone knows what a CRM is, right? So what we do is we go into our LOS, we take out the loan data, then we go into the CRM, and we marry the two for campaigns that move the needle for sales. So for instance, if you're a loan officer in our ChatGPT, you can go in and say, show me every loan I've done in the last 3 years with an interest rate of 7.5 and above. Okay. Now you can say, well, now show me the savings at today's rate of 6.5 on every one of those loans.
And now go ahead and reach out to them.
Well, it'll show you the whole list, bang, 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 and you open up a file. Meanwhile, you've not left the system ever, right? So what we're used to in our business is it's very clunky technologically. I don't know about title, but in mortgage, you're in this system, you're out of it, then you're in this. It's like 10 systems pulled together, and loan officers are lazy as shit. They don't want to do any of this stuff. They just want to, kiss babies, shake hands, move on to the next client. We got ADD, like out the yin-yang. So this enables you to stay in the system, and like you said, once you've done those things and you can see the savings, you can then click one more button and put the benefit in front of the consumer without ever leaving the system. You can text, you can email, boom. So that's something we're doing that's a major differentiator.
100%.
That the founder of NFM started. It's called Inside.ai, and we've got several IMBs using it now.
I think it's brilliant.
Synergy One's using it. Alcova, which is a Virginia-based company, is using it. That's where we are right now in Virginia. Right?
I mean, very cool. I was just talking to a loan officer who does well. Let's go. That's $30 million last year. I'm like, hey, what do you do to reach out to your clients, stay in touch with them? Because I don't, like, really, he's like, I need to get better at that. I'm like, wow. you're doing 30 million and you're not even reaching out to people in the past at all. It's just all, I mean,
Well, that's an example of this of a system should be doing that for you.
Yeah, exactly.
As much as we've advanced, setting it up so the loan officers don't have to do stuff they're not great at.
sure, 100%.
Yeah.
I mean, like you said, it pulls the data. It can, twice a month, I want you to pull anything in this interest rate, reach out to them, say hi from me. I mean, it's a no-brainer.
Yeah,
right?
and they don't know it's not coming from you.
They don't know. I
Yeah,
love
so I
it.
mean,
It's great.
it's got your likeness, and these days you can do videos where it actually looks like you. Your lips are moving.
Yeah.
That's crazy.
Yeah.
That's wild.
Do you guys have that technology
We're
yet?
playing with it. We've not. I think we're a little conflicted as to whether or not we should do that or not. You know,
Makes sense.
It's a little bit misleading.
Yeah, it's like, wait, the lips are not going with the words. What's going
Yeah,
on?
I mean, I think there's you take a little of the authenticity out when you start emulating people's movements and their likeness. I think email is fine, especially when you train the LLM to talk in your voice.
Yeah.
So I'm on LinkedIn. You know that I've got like 35,500 followers. I'm one of the most followed people in mortgage. I use AI, but after I train it. So I've uploaded 30 of the most authentic pieces I've ever done in my writings, whatever. So it literally can talk in my voice at any moment. Now, that's just the scaffolding. I'll go in and tweak it. And I've never once used AI exclusively to do a post, but it's definitely here to stay and very exciting.
Well, I've used your LinkedIn post because I think you have good thumbnails. So I was looking at the Redfin, Mr. Cooper. I'm like, I wonder if he's just using AI for that, or is he actually designing these thumbnails? And you'd mentioned earlier, that's AI. It's awesome.
It's a layup.
Yeah, it's a layup.
Yeah.
It looks great. It's hard not to see it when you're scrolling through. You're like, oh, this is legit. This is a legit publication.
Yeah, pay the $20 per month, people. Stop being so cheap. You don't want the free version. Just
Are you
pay
using ChatGPT or are you using something else?
ChatGPT.
Yeah. Okay. Yeah, and like you said, it's all about paying that 20 because then it learns you. I've talked to a couple people who they get out of a meeting and they're like, hey, here's what I learned in the meeting. You have a conversation with ChatGPT. Starts learning about you, right?
That's right, yeah.
Hey, next time you send a loan origination, et cetera, make sure to include my number at the bottom. Oh, sure. Like stuff
Not a
like that,
problem,
it'll remember and do every time.
Yeah, and I post every day. So last year I posted 365
That's
times.
nice. Yeah.
And it's important when you're you're a marketing guy. I'm a marketing guy. I love marketing. I'm so passionate about it. I think you have to be consistent if you want to move the needle on your business.
No, it makes sense.
You can't be fly by night. You can't drop a post here and expect people. You drop one post, you've got like 4 people looking at it. You're like, whoa, why aren't people paying?
Yeah.
I thought this was a good one.
Right.
It really
exactly.
has less to do with what you're saying, and more to do with how often you're saying it.
Yeah, sure.
That's the big. That's like the thing people don't realize.
Yeah.
So I carve out time every single day to do a post online.
It's good work.
I have one in my head right now on this trigger legislation that is being reintroduced again. And this will be a post I do later tonight or tomorrow.
Let's talk about it. The trigger.
Yeah.
Tell me about the trigger legislation.
So trigger leads. It's just to give you a quick background. That's the annoying calls you get when you have your credit pulled by a lending institution, and all of a sudden you're getting 10 calls, 20 calls, 30 calls, text messages. It's the craziest thing ever.
Yeah.
Those are trigger leads. So what happens is when you have your credit pulled, the credit bureaus somehow, without your permission, are allowed to resell your data. Yeah, you never told them they could. That's why the phones ring. So there's this legislation introduced that bans that. You can no longer do that, right? Which the consumers will love, except for the fact there's a carve out in there if you have a banking relationship with a bank, like your checking and savings are at Chase Manhattan, they're able to look at your triggers. If your current loan servicer, in other words, the person you pay the mortgage to, they've got visibility into the triggers. And then the loan officer that originated your last loan, they can see the triggers too. So there are all these carve-outs. People's phones are still going to ring ad nauseum. I'm like, ban the whole thing. This is the thesis for the post I'm going to do. Ban the whole thing or don't bother.
Right.
That's my position, which the Mortgage Bankers Association won't like that position.
Yeah.
Because they're championing the fact that they think they can get a bill through, which their intentions are amazing. They're great people, not far from where we're sitting right now, but triggers are a pain in the ass. And they just need to be gone altogether. So that's an idea that's in my head. I'll go home and I'll put that together. And AI is really phenomenal. I did a post that got like 40,000 impressions.
Yeah.
A month ago, maybe. I took the earnings from Rocket and I took the earnings from UWM. I Googled them both.
Yep.
Got the link to the article on Rocket. I asked my AI to read this article, and then I asked the AI to read the article on UWM, United Wholesale Mortgage. And then I said, let's put an analysis together, a LinkedIn post together in my voice, right? Because it had already read so many of my things,
Sure.
right? Comparing the two. And not in a derogatory way,
Yeah.
just what did they do well, what did they not? And it spit out the most beautiful post.
I mean, it's amazing. It's unbelievable.
It's crazy,
I mean,
right?
It's great that you're using it. You're way ahead of the step of the games. Like, people did not have any idea about this whole, like, learning yourself thing for $20 a month, which is just nuts, right?
It's worth the money.
It's unbelievable.
In fact, anybody that wants me to pay for it, I'll pay for it. The first
Done.
one person that says yes.
So you're talking about a lot of things in the news. We're talking about Redfin. We're talking about Mr. Cooper. This consolidation? You think it's good, bad for the industry? What's your take on it?
I think it's necessary. I think it's necessary. I think if we didn't have the administration we have right now, I don't think that there'd be so much activity because it would be scrutinized so much. You know, we have so many. So few people, many less people, is what I'm trying to say, in scrutinizing regulatory frameworks. And I think if Biden was still in office or Kamala Harris was in office, then potentially there wouldn't be such a strong move towards consolidation. But there was a HUD letter that came out. If anybody out there Googles HUD letter December 15th, 2022, that was something that where FHA clarified that realtors could make money on mortgages. So basically what they did is they clarified who can and who can't make dual compensation.
Right.
They intentionally took the realtors out of the folks that can't make dual compensation. So they laid the groundwork, and this administration coming in, so I think we're going to start to see real estate agents making money on the mortgage side, which I'm sure is really interesting to your audience. Like, how do you do that? I don't think anyone's really figured out how to do that, although there's some independent mortgage bankers that are getting a lot of traction in the market right now by bringing high-producing real estate agents in and saying, look, share a P&L with me. All you have to do is do what you were doing before. Drive the business in. You'll get 50% of the bottom line,
right?
And I'll do all the loans. Yeah. And that's legal.
Yeah.
You can actually do that.
I've heard people talking about it. And
it's happening.
It is happening. And I've heard other people be like, oh, your wife becomes a loan officer. I've heard some other pitches. I don't know. But that seems like a way around the rules, what I was hearing. But that one is obviously what's allowed now.
Well, a lot of agents are spooked by it.
Yeah.
Right? Because do you really want to get caught up in that? And is the juice really worth the squeeze? I think the thing to avoid is the onesie twosie agents. It's not good for them. It's not good for you. But the big agents that can drive a lot of business in, it's great to have that extra revenue, especially with your commissions being tamped down, right? Yep. I think we're heading towards a world where the commissions continue to diminish. And when you talk about the consolidation, definitely think that the mortgage business is going to change a lot along with the real estate business, and that the commissions, I know that the early results from the NAR settlement are not staggering in terms of the amount of revenue going to agents are still making a good amount. But you're going to put these two together, and the amount of money that is made on these transactions, I think, is going to continue to dwindle, and we're going to need other revenue streams.
Yeah, it's fair. I mean, and you've seen a lot of, obviously, agents have been involved with title, some are form or fashion through joint ventures and stuff like that.
But you make title fun, man. That's your reputation.
Of course.
Everybody's talking about you, bro.
Of course we do.
You got it, man. You got it going on, bro.
Hey, listen. The most boring industry in the world. True story. So I came from sports and entertainment industry. Fun industry, but everyone was good at marketing. I was like, how do I find an industry that's just bad at marketing? Ding, 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 ding. I bought a house. It was like the worst experience ever. It was boring. No one had social media. No one had, any of that stuff. So it was like the perfect industry to come into. And you're buying a house. It should be a celebration.
When was that?
That was 2016. NFM Television, a production company. Tell me about this.
I got something better to tell you. When I was a kid, growing up in Baltimore, you'll never guess who used to jog over to my house every week for multiple years. Who's let's play the 25,000 pyramid game. Where I give you hints and you guess.
Yeah, I was going with Ray Lewis.
Okay, I think you can solve this in like 15 seconds or less.
Okay.
The most famous female talk show host.
Oprah.
Done.
Okay.
My man, yo.
That was
Crushed it, son. Yeah,
So-
Oprah and my father started together on a show called People Are Talking. So if you Google Richard Sher, Sher, and Oprah Winfrey, you'll see that from 1975 to 1980, when I was just a kid, they had this show called People Are Talking, and that's where she got discovered by Quincy Jones, was a guest, and he knew of an opening on WLG in Chicago. He was a guest on the show, sitting on the couch. Said to her, "You're amazing. Let me tee you up for this interview," and the rest.
That's crazy.
Is history.
That is a great story. I've never heard that before.
Yeah,
But,
so I grew up, to your question, I grew up sort of in the womb. going into television studios, watching these shows. And that's when I was as young as I could remember. So
Yeah.
I always wanted to be in broadcasting. And when I got out of college, my first job was working as a sportscaster for an all sports radio network.
All right, I want to hear about this. This is
Prime,
great.
Prime Sports Radio in Dallas, Texas. I was in the Cowboys locker room every day for 2 years.
Yep.
Michael Irvin, Troy Aikman, Emmitt Smith, Barry Switzer, Super Bowl championship that 1 year that I was there. And then I got hired by the Baltimore Ravens the first year that they came into my hometown. I'm a Baltimorean.
Yeah.
So they heard about me. They hired me to come to Baltimore to do that. And then I was there for a year. And then WBAL hired me.
Okay.
That's the Orioles flagship station.
Right.
So they hired me. I was a young punk, 26 years old, didn't understand the importance of being a grown-up and studying, so I got a few things terribly wrong on the radio.
Yeah.
Like, thought a left-handed pitcher was a right-handed pitcher. Like, I mean, the shit you just can't do when you're in that kind of seat. So I got demoted to a weekend guy, and I needed something to do during the week, so I got into mortgage. And so NFM TV, which you're asking me about, was a brainchild. It's a labor of love.
Yeah.
Broadcasting to me as I just demonstrated, it's in my blood. So when I had the opportunity to get out in front and build a studio to start to use it for referral partners, agents, loan officers, one central place for corporate to communicate, I did it.
Yeah.
And so we've got this studio down in Baltimore that we've had since 2019.
Still being used.
Oh, yeah.
Yeah.
Yeah, I go in there a couple times a month and do interviews. Yeah.
That's awesome, man.
That's
That's a great story.
That's NFM TV.
I mean, I wouldn't expect it to start with Oprah. And she came to your house and all that, man. That's unbelievable.
They're still good friends. My dad's 82,
really?
and yeah, she's
awesome.
She's a great person.
Great. So you started NFM, but then you went and launched, I believe, what is it, Citizens Bank?
Yeah, I opened up a mortgage company
Cool.
along the
And
way.
then you did that, and then you came back to NFM, and you're currently a managing director there for lending. Is that right?
Yeah.
But you haven't done a loan, I believe, in close to 20 years.
Only 2 decades.
But
But it's like riding a bike.
it's like riding a bike, right?
Yeah, I mean, what's your income? How's your credit?
Yeah.
What do you have to put down?
Yeah.
Let's get along. Let's
What's
build a
the
rapport.
next thing, on that note, what's the next thing AI gets rid of and within your industry on the lending side? Like, there's got to be, what's the next task? What's the next job role?
Well, maybe not the next, but the biggest is going to be underwriting.
Yeah, right? I mean, you would think underwriting shouldn't be that hard. Like, why should it ever take longer than an algorithm popping in a few things?
The problem is, loans are hairy.
Yeah.
That's the problem. So you have a gap in income, you've got child support. There are these things
That's
there are these things that come up. Like very few loans are like we're in the Northern Virginia area, right?
Yeah.
Everyone's putting 20% down with an 800 FICO
Yeah.
and $1 million in the bank. Unfortunately, that's not the real world,
Yeah,
right? The real world, people are living paycheck to paycheck. They're struggling to put money together. You've got the gig economy, which has come post-COVID, where a lot of people are doing odd jobs. They don't even have bank accounts, some of them. So how do you piece all that money together? And that's why non-QM is becoming more prevalent these days. So underwriting is a big one, though, because it's very expensive.
Yeah.
Underwriting, like I think when we were in COVID and loans were just falling out of the ceiling rafters, some of our underwriters were making $200,000 a year.
Yeah, sure.
That's a lot, bro.
Yeah,
Bro,
and so-
18 grand a month?
And so, they're
Too much.
They're looking at these different gaps, and then is it their final decision, or are they making a recommendation to one of your executives?
Well, I think
on a lot?
it's a final decision. At that point, it has to be a final decision. The question is, will Fannie and Freddie, which may or may not be in conservatorship, whenever this happens, will they rep and warrant it? Will they be willing to buy it based on the findings of the engine?
Right. No.
And that's where it gets. We're talking about a lot of money, man.
Yeah.
Mortgage-backed securities.
Sure.
There's so many different links in the chain.
Yeah. CFPB, 1,500 jobs lost recently.
Yeah.
What's your take on it? Do you think the organization did a good job?
I did a post recently, thanking the 1,500 employees for their service, because that's what it is. It's service. You go in and in one administration, you do the best you can, and you're working for the people. I mean, what could be more altruistic than trying to protect the consumer? So I didn't love the way that they led. It was by enforcement. They didn't tell us the playbook oftentimes. It was, you'll find out when you're doing shit wrong when we fine you. Here's the speed limit. Here's how you stay in this lane. Here are the cans and can'ts. So they scared a lot of people, and they led by enforcement too much. I'm hearing that there's nobody left in mortgage for the most part. They've got 200 employees or so left. They'll be back.
What do you think the reason that is? Like, you would think if you just want to be ethical and you want to do it the right way, hey guys, here are the rules and regulations. If you do it, you're fine. Versus like, not going to tell you what the answer is, and then they catch you.
Yeah, shitty
Is that
leadership.
to prove? Is that to prove the 1,500 salaries? It's like, we were able to get this money from people. It's like, you see what I'm saying? Like,
I think it's just bad leadership.
Yeah.
If you or I was leading we're leading the CFPB, we would say, all right, here's what you can here's what you're allowed to do, here's what you're not allowed to do, and it would be what it would be. If you get caught speeding, you get fined.
Sure.
So I doubt that you and I would be doing, but you can't explain why people think the way that they think.
Yeah.
It comes down to the leadership, and CFPB is necessary, though, without any police out there, and I think that's why the Trump administration is going to keep something in place.
Yeah.
There's a lot of areas that they can look at. You have banks, you've got payday lenders, you have mortgage. There's so many areas where people need to be really careful, and there are a lot of scammers out there, man.
Yeah.
I mean, every day, and I don't know if this falls under their purview, but every day, me or my wife are getting text messages from people like, you're click this link to approve this PayPal purchase or to decline. Like, there's so many scammers out there.
There's so much of that, and I don't see people going after that. And so for example, I get letters in the mail where they have a picture of your house and they're threatening, like, I don't want to have to find your kids, like, if you don't send me this much money. It's like completely messed up stuff here. But like, I don't think they're following this. Wire fraud, obviously, every single day.
We got caught on that a couple times. We sent a couple of wires. We never got the money back.
Yeah, I mean, every single day there's thousands of people trying to convince people to send their life savings wrong place. But I don't hear about like prosecuting and going after these people significantly. It's like, oh, they're in another country. There's nothing we can do. So there's no fear. There's no reason for these people to stop. And then you get situations where a company is following all the rules by the book based on what they know, trying to do the right thing, and it's like, let's put them in the news and do big fines, which is so stupid. It's like, you actually have bad people that are fraudulent scammers.
Wild, man.
Not going after those people, but instead you're going after companies that apparently didn't follow the rules based on
No
rules that
bueno,
you
man.
wouldn't put
No
out there.
bueno. It's not fair.
There's an issue there.
Yeah.
And I think a lot of it, I think it kind of has to do with political gain, or the people that are putting the headlines out. Look, we've had this company pay XYZ. I mean, you tricked them.
Yeah, good for you.
Yeah, exactly.
Yeah.
So I think there's something wrong there. I got to figure that out.
Yeah. Well, so to answer your question, the CFPB, I think there's a place. There is a place for it.
Yeah.
Now, did they need 2,000 employees? I'm not sure about that.
Yeah.
I think what we've found is there's certainly a lot of controversy around Doge and things like that. But I have to say, I know many, 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 many government workers that don't do very much, or that hadn't done. Now, some of them are out of jobs. Some of them are still in jobs, but man, they're the ones that I know aren't working that hard. And it's not to say that people in government don't work hard, because some of them are the hardest workers around. But these people that are on the periphery that have these government consulting contractor jobs, the ones that I know, they're mailing it in, some of them.
Sure.
And I'm not trying to insult anybody.
Yeah, no,
I'm probably going to get I'm going to probably get bombed or something. Something terrible is going to happen.
No, you'll be fine. One thing I've noticed a lot, you're on HousingWire posts. What's your affiliation with HousingWire?
Just a big fan.
Yeah.
They gave me a Vanguard Award in 2024 as a leader in housing. I love that. Great group of people, fair and balanced, covers the news, housingwire.com. Just a big fan of those guys. They're based in Dallas, Texas. I hadn't been back in like 25 years, and now I've been back 3 times all in 1 year, because they have the majority of their conferences are at the George W. Bush Library, which is just it's on the SMU campus.
Nice.
You ever been down there?
I have not. So, you going to stick with the current company?
Get the hell out of here, man. What is your problem? Are you trying to hire me?
Yeah.
Did this go so well? You want me to be?
Exactly.
I can be your co-host.
I want you. You already know everyone. I mean, you can set up
we
large partnerships for us. It'll be fine.
You know what? That's where the money is, isn't it?
Are you going to retire one day? Are you going to keep this going? Are you enjoying what you're doing, or what?
I have 2 young kids that go to private school.
Yeah.
So
You got work to do.
I'm not at 13 and 15. I'm not retiring anytime soon, brother. We're on the cusp of this AI revolution.
Yeah.
I'm not going to miss this.
It's exciting.
Yeah, I need to see where this goes, and I want to be a part of it.
You got any questions for us?
I have a lot of questions for you.
Yeah, what do you got?
Do we switch chairs?
No, you just go right there.
We don't flip?
I'm too lazy.
You're too lazy to get up?
Yeah, what do you got?
And I'm too weak to lift you up, so let's just stay where we are. The title business.
Yeah.
You've been in it for a minute. What differentiates great title company from just another title company?
Yeah,
what are the differentiators today?
Sure. So I would say a few things. Number one, we're in a service business where the pricing is already set. So, like, what are you going to do? Well, number one, when you come into our office, we got ping pong tables, we got arcade games, we got beer on top, we got coffee on top.
You have T-shirts. You gave me a T-shirt.
And the softest shirt in the world. You're like, is it comfortable? The softest.
Of course it is.
The softest. So there's an experience situation. You come in here, we've got great photo opportunities. We've got keys of all the different agents we work with. So you're going to get an experience. If you're buying a house, you want it to feel special. You don't want to go into a title company, it's dark, and there's an attorney talking down to you. So that's just one element of 30. So on the proactive side of things, you can't just have one processor. You have to have an assistant for that
Oh, for sure.
processor
Yeah.
to create responsiveness so that we solve that problem. So there's many problems along the journey, and you're always, as long as you're always working on solving them, then you have great service and you're better than 90% of the others. So beyond that, what do we do? If I'm a real estate agent, how do I make more money? So we're always trying to solve that problem. So number one, we've got really cool software, Ally Title Toolbox, where these agents can go look in their neighborhood and they can get emails and phone numbers and they can find out if they're empty nesters or divorces and all this information.
How do you have that?
Well, because that's the stuff that we've
Does
done.
every title company have that, or is that
Not every title company does, but we do. We went and searched for it and looked for it and found, the person that put this all together, and we've kind of
on the mortgage side, we call that market intelligence, being able to see things before they happen.
Yeah,
Interesting.
so that's something we should talk about. So, like for example, you mentioned, like I can have you go and look at our software. Hey, who has an assumable VA loan over 8%, or who has a rate over 8%? So you can reach out to them for a refi, or who has an assumable VA loan? You could possibly reach out to them, maybe a buyer for that house, and they can assume the loan. So we put together a variety of pieces of data and tools to make agents more successful.
That's hot, man. That's hot.
Yeah. On top of that, we have a podcast.
I got
we
another
give
question.
exposure to people.
I know you gave me exposure.
Yeah,
And I got to keep my clothes on too.
You're welcome.
Yeah, I've never been exposed with my clothes on. Thank you.
Yeah.
What is the buzz out there? Like you asked me on the lending side, what it's like.
Yep.
I'm really curious now because you're dealing with so many agents every day.
Yep.
What do you feel like the temperature of agents is right now with all the consolidation? What's the concern level, CCP and otherwise?
Yeah, I mean, I would say recently Compass purchased Washington Fine Properties, and there's some concern there on the brands and some of these agents. So that would be one thing. I'm definitely seeing a lot of the agents that were doing, a deal every couple of months. They don't seem to be around anymore. I think a lot of people are leaving the industry. I think the agents that had always crushed it before, they're still doing really well. There's less people in the market. But I think people look at it as this is a lot harder situation than 4 years ago. I mean, I think one of the long-term issues with our industry is people locked into 2.5%, 3%, and they are literally never leaving their house. So even if you could go, I can get you down to 5%, why would I want to double my mortgage rate? If I'm at 2.5%, it's going to be really hard for some of these people. They typically would move up to houses along the way. They're just like, it's just not worth it.
Government needs to come in and subsidize. There's been some conversation. I've talked to two very powerful people, Mark Calabria, former FHFA commissioner. I've had conversations with him. He has ideas about ways the government can offer a special coupon for people to get out of their house.
That's interesting.
Also, Tim Bowler, who's the president of ICE Mortgage Technologies.
Yeah.
They own the New York Stock Exchange. He has been talking to some people about some kind of program where the government can step in as well. Having said that, though, the number is diminishing. I mean, life does happen, and life will always happen. Sure. It's just going to take us too long to flip the script. Yeah. But I think last time I checked, 65% of people out there had a rate of, I think it's 4% or better. To your point, you mentioned the good agents are still slaying it. Yeah. And what differentiates the great agents from just the okay agents? And has it always been the same, or do you have great agents doing more of things in today's world that makes them great?
Yeah, it's a good question. I think the ones that I see that are still doing great have some type of niche that, one guy, whether he has a partnership with a lender and he's, whether Veterans United or whatever, that's interesting. There's a guy that crushes it, that does that. There's someone that's in Old Town or whatever and just dominates these two neighborhoods, and they're on. Yeah, they have 80% of the neighborhood. So there's a specific niche within that little geographical area. So I think in my opinion, it's people that really dove into a niche of some kind.
The word divin should be a word.
It shouldn't be. I mean, I don't know why it wouldn't.
Why wouldn't it be a divin?
Should have been,
divin.
Right?
Yeah.
Divin.
Yeah.
Divin.
Yeah. Who's not divining?
Exactly.
Divining.
That's it.
Interesting.
So I don't know. I feel like there's whether the guy back in the day when condos were good, we had a guy, the condo king, he did all the condos. Yeah.
So you're bringing me to a really important question. This idea, like a Rocket Redfin. Rocket's Achilles heel has been that they're not in neighborhoods. They've tried to do first-time home buyers from a call center. So is there a world where technology is so good that you don't have to be in the neighborhoods, or you can find it through AI or whatever? You can have a conversation with a consumer without knowing exactly where the Starbucks is or living in the community yourself. Does that matter less today And then down the road, will it matter even less? Or will you always have to be, you just gave an example of a great agent killing it in 2 areas. Is that the way it's just going to be forever? Or are we moving to a period of time where technology is going to replace the experience?
Yeah, so I think it's a good point. So like, I hear all the time in this area, especially, make sure you have a local lender because we want to buy a house in 2 to 3 weeks. And if you go with the Rocket, you're never going to get approved in time. So what is the issue there? Well, I think what they're saying is the underwriting might take too long. I don't know why it takes so long for a Rocket to do loans in this area, but I've heard that many times, like, they can't get it approved in time. So I would think with technology and AI for underwriting and other things, you should be able to speed up that process. And if you can get the rate you want and speed up the process, I would think technology would allow a big player like that to be able to compete in this area more. But as of now, I always hear still many agents say, hey, we're going to buy this house. We're going to be aggressive. We're going to try to get closed in 3 weeks or whatever. You need a local lender.
Well,
What do you think
Rocket has said they want to be the Apple of mortgages. They want to dominate the market. I say to myself, well, every time I go into Apple, I spend $700-800. That's a lot different than spending the median home price of $419 at last check. Like, will we ever get to a point in time where it's just like checking another box? Or I think it's being overlooked. I think relationships are going to continue to matter. I believe you have to remain in communities. You have to know the area. I think first-time home buyers are going to want that comfort and that even though Gen Z is the first ever cohort of digital natives defined as 3 hours on the phone every day. They're used to clicking and going on behavior. That's a whole other conversation about influencers, which we could get into, in another podcast. At the end of the day, the success or failure of your business, the success or failure in my business, in any business, communication and relationships.
Yes.
And that is an emotion we're starving for. How in the world is a computer going to replace that?
The only thing I'll say is that, got a car loan recently, through Lightstream. Went on, everything was done digitally. I applied, they gave me my rate. Then that day or the next day, the money was in my account. Never spoke to anyone. I was like, wow, that was very simple. So like, why can't that happen? Like, hey, give me all the rate options. That's the lowest. I'm going to choose that. They have some algorithm where it gets approved, and it's like that was an easy process.
Why were you comfortable doing that?
And I would say number one, I made sure the company was legit.
Did somebody tell you, hey, I did this, you should do it too? Or
what? I think I actually called. I asked the car company, hey, who should I go through to get a loan? They're like, I heard Lightstream's easy to use. I think that's what happened.
Everybody out there that watches this that's scared, and probably a lot of people like, God, is lending ever going to be the same? Is housing ever going to be? Just know this is just another one of those moments where people thought the sky was falling, and it wasn't. Every single moment, and I've been in the mortgage industry 28 years, every moment like this,
opportunity,
9/11, COVID, financial crisis, and all the things in between were all moments where we questioned whether or not our business would be around, and they were all precursors to the greatest opportunities we had ever seen.
Sure.
And this will be no exception.
I think that's a good point. That's what we hoped for and believe in. Now, my biggest concern is just these people that are never going to move because they're locked in rates. But hopefully, the government could step in.
Why is that a concern, though? What's rooted in that concern?
The inventory level, like the transaction volume for me. For me, we're in a transaction.
Can I ask how much it's down?
We've actually grown through it.
There you go.
So we figured it out.
Isn't you just answered the whole thing?
Yeah, we've picked up a lot of business over the last few years. We've continued to grow and grow and grow. And so, is there something that sparks it where there's going to be more volume? If so, we're going to be in a great spot.
Yeah, it's called 5.75% rates.
Yeah.
5.5% rates. It's called life.
Yeah.
It's called life. It's called death. It's called kids. It's called jobs. It's called. A lot of people are accumulating an unbelievable amount of debt right now. Like the debt level in our country is the worst it's ever been.
Yep.
It's in the trillions. So why do I mention that? Because people are going to start to have to make tough choices. And with the amount of equity that there is right now, if you can get out from underneath that 2%, that 3% rate, 2%, who's got 2%?
Yeah.
Most people have 3 to 4 or whatever, but you're able to get out of that $50,000 credit card or $100,000 at 28%, and you can just walk away from it all. Oh, and by the way, get $300,000 in equity or even $100,000.
Sure.
Like that, to me, that's what's gonna.
There's some volume there. That's
gonna
be
start.
happening.
That'll accelerate it. So you got a good rate. Okay.
Yeah.
There's people still want to move, man. They still have things to accomplish in their life. So
For those out there that want to talk to you, learn more, follow your channels, what's the best way?
it's all LinkedIn, man.
What is it?
Greg Sher, Sher.
Good to have you. Thanks for
having
coming.
me.
Appreciate you.
All right, bro.
Yeah.